Hi there, Brian here. Welcome back to the Cash Flow Desk. Today we're talking about speeding up your month-end close. If you're spending the first week of every month scrambling to get your books closed, this video is going to change that. Month-end close doesn't have to be a marathon of late nights and spreadsheet chaos. With the right systems and a bit of preparation, you can cut your close time in half, sometimes more. Here's what we'll cover: the biggest bottlenecks that slow down close, how to automate the heavy lifting, and the tools that actually make a difference. Let's start with why month-end close takes so long in the first place. The biggest culprit is manual data entry. If you're still keying in transactions one by one or hunting down receipts and invoices, that's where most of your time goes. Another major slowdown is reconciliation. When your bank statements don't match your accounting software, you end up playing detective, tracking down missing transactions, duplicate entries, and coding errors. And then there's the waiting game. You're waiting for credit card statements to arrive, waiting for team members to submit expense reports, waiting for vendor invoices to show up in your inbox. All of this creates a bottleneck that pushes your close into the second or third week of the month, which means your financial data is already stale by the time you're making decisions. The fastest way to speed up close is to automate transaction data flowing into your accounting system. Start with your bank feeds. QuickBooks and Xero both have solid bank integrations that pull transactions automatically. No more manual entry, no more missed transactions. But here's where a real advantage comes in. If you're using Ramp, you don't just get transactions flowing in, you get clean, enriched data that's ready to book. Every swipe comes with merchant information, pre-categorization, receipt capture, and even policy checks baked in. That means fewer hours coding transactions, fewer back and forth with employees, and a cleaner reconciliation process from the start. And it's not just card spend. These tools also automate bill pay and reimbursements, so invoices, approvals, and reimbursements flow directly into your accounting system in real time. Instead of chasing down paperwork at the end of the month, everything's already matched and documented. The goal is to have as much data flowing automatically as possible, so your close becomes about reviewing and adjusting rather than entering and hunting. Next, you need a standardized close process that's the same every month. Create a close checklist that covers everything from bank reconciliations to journal entries to financial statement review. Tools like Notion work well for this. You can build templates that track progress and assign responsibilities. The key is making sure everyone knows what they're responsible for and when it's due. If your AP person knows they need to have all vendor invoices coded by the second of the month, and your sales team knows commission calculations are due by the third, you avoid the last-minute scramble. Also, don't wait until month end to start. Begin your close process on the 25th of the current month. Get preliminary numbers, identify any issues, and handle the routine stuff while the month is still open. This front-loading approach can cut your actual close time down to just a day or two. Now let's talk about tools that are specifically built to speed up close. If you're doing any kind of volume, you can consider a dedicated close management platform like Flowcast or Keeper. These tools create workflows for your close process, track completion status, and help with things like account reconciliations and supporting documentation. They also provide audit trails, which becomes important if you're dealing with investors, lenders, or preparing for an eventual exit. But here's the difference. While close management tools help organize the work, Ramp helps you eliminate it. Ramp automatically syncs every type of company spend into your accounting system: card transactions, invoices, reimbursements, and reconciles them in the background. Instead of waiting for statements or chasing missing receipts, you're left with a near real-time ledger that's always ready to close. That means less time digging through card statements and more time actually analyzing the numbers. And since these all-in-one finance automation tools keep an audit trail on every transaction, receipts, approvals, policies, coding, you're always prepared for reviews, audits, or investor requests. Let's tackle some specific reconciliation challenges that slow down close. Credit card reconciliation is often the biggest pain point. The trick is to reconcile weekly, not monthly. If you're using Ramp, Their integration with QuickBooks and Xero means transactions sync automatically. That means your weekly reconciliation is less about detective work and more about spot-checking exceptions. For cash reconciliation, focus on timing differences. Outstanding checks and deposits in transit are normal. Just make sure you're tracking them consistently. And here's a pro tip. Create standard journal entries for recurring items like depreciation, accruals, and prepaid expenses. These should be templated so you're not recreating them every month. The goal is to make your reconciliation process so routine that exceptions stand out immediately. Finally, track how long your close actually takes and where the time goes. Most businesses don't measure close time, so they don't know if they're improving. Start timing each major component: bank recs, AP processing, journal entries, financial statement prep. Once you have baseline numbers, you can see where automation or process changes will have the biggest impact. A good target for most businesses is to have preliminary numbers within 3 to 5 business days of month end and final numbers within a week. If you're taking longer than that, there's room for improvement. And remember, faster close isn't just about efficiency, it's about having timely data to make better business decisions. Here's the bottom line: month-end close doesn't have to be painful. Automate your transaction data, standardize your process, use the right tools, and measure your progress. Do this consistently, and you'll cut your close time significantly while improving accuracy. If this was helpful, hit like and subscribe. Drop a comment with your biggest month-end close challenge. I'd love to help solve it. Thanks for watching. I'll see you in the next one.